Welcome to this explainer. We are unpacking the August 2026 Rappaport Trade Diamond Index. Now, for anyone who has been closely watching the global diamond trade over the last couple of years, you know it's been a pretty bumpy ride, to say the least. So today, we're going to dive right into the latest data, analyze the shifting currents across different continents, and investigate the big question on absolutely everyone's mind. Is the diamond market finally turning a corner?
Let's kick things off with a number that has been hanging incredibly heavy over the entire industry for well over a year now. 13. For 13 consecutive months, the overall mood, and honestly, the metrics, have been dominated by this relentless downward pressure. It's been a really tough environment for dealers, manufacturers, and retailers alike. But as of August 2026, something massive has shifted.
That's right. The 1-carat diamond index has officially broken its 13-month downward streak. This isn't just a minor blip on the radar. This is signaling a huge turning point for the global trade. Think of it as a much-needed psychological and financial breather for an industry that was frankly desperate for one. We're finally seeing the floor stabilize, and in some key categories, we're even seeing a legitimate bounce back.
Here is our agenda for today. We'll start with the global market mood, then move on to diamond shapes and trends, do a quick regional market breakdown, and wrap it all up by the numbers.
Section 1. The global market mood. We're definitely feeling a shift in energy right now.
There are several fascinating elements converging all at once here. Over in India, the India International Jewelry Show, or IIJS, kicked off with a genuinely positive vibe as the domestic market picks up steam. We're also seeing dossier diamonds continuing to recover nicely. But, the real kicker here is the combination of inventory cuts and buying habits. Because inventory was slashed so drastically during the downturn, the supply is actually quite tight right now. And suddenly, major U.S. chains are jumping the gun and buying early for the upcoming holiday season. That sudden surge in demand against a tight supply is actively driving up prices, particularly in the categories that took the hardest hits last year.
Zooming out a bit, broader market forces are definitely shaping the long-term outlook. For instance, there's a proposed Indian tax exemption for rough diamond sales that could significantly boost the local trade if it gets the green light. On the corporate side of things, Anglo American reported that there is actually more than one bidder in the race to acquire De Beers, which injects a lot of competitive energy into the corporate landscape. It's not all perfect news, though. We are seeing some regional hiccups, like reports of a diamond grading scam in Vietnam that is putting a temporary dent in their local demand.
Moving right along to Section 2, Diamond Shapes and Trends. Let's talk about what buyers actually want.
So when we look at the different cuts, there's a really fascinating split happening in the market. Overall, round diamonds are generally seeing better, much more stable price trends across the board. But once you move up into the 2-carat and larger space, long fancies, I'm talking shapes like ovals, marquises, and emeralds, are completely dominating the conversation. They are vastly outperforming rounds in those bigger sizes.
To put this into perspective, high-quality marquises are in such short supply right now that the marquise is officially the most expensive fancy shape on the market. Elongated shapes are so incredibly popular that long cushions are super easy to sell. Actually, scratch that, it's not just that they're easy to sell, they are trading at a massive 20 to 25% premium over the traditional square cushions. We're also seeing a nice resurgence in princess cuts, specifically in the GHVSSI categories, after a really long period of weakness, though prices there are still a bit low. Antique cuts and styles? Absolutely hot right now. But here is the absolute most important takeaway for anyone buying or selling. The market is ruthlessly prioritizing the make of the stone. Buyers are totally fine accepting lower colors and clarities as long as the diamond is eye-clean with excellent proportions. Badly proportioned fancies? You literally can't give them away right now. They are practically impossible to sell, but those exceptionally well-cut fancies are commanding serious premiums.
All right, Section 3, Regional Market Breakdown. Let's see how global hubs are reacting to all of this.
Starting over in the United States, the vibe is distinctly upbeat. U.S. holiday demand is kicking off way sooner than usual. Retail chains are scrambling to lock down goods early because they are genuinely afraid the stones they want just won't be available later in the season. Like we mentioned earlier, ovals in 2 carats and larger are performing exceptionally well here, and old euros and old mine cuts are moving across all sizes. And here is a huge strategic shift. The 1-carat natural diamond is starting to compete much better with synthetics. Why? Because natural prices have corrected to a point where they are looking highly attractive to consumers once again.
Meanwhile, if you are looking for action in Belgium or Israel, you might honestly want to check the beach.
The diamond sector in Belgium has largely been on its official holiday through mid-August, making it a very sleepy summer market, and trading desks in Israel are seeing similarly low activity and pretty low overall sentiment.
Bouncing back to India, as buyers actively stock up ahead of the IIJS, the industry is cautiously but very happily enjoying a natural diamond recovery. This is a massive deal, guys, because they are emerging from 3 long years of weakness. We're seeing solid improvements, specifically in smaller sizes, like rounds from 0.30 to 0.69 carats, which have just been incredibly sluggish. Supply in India does remain tight, mostly because diamond manufacturers are still playing it safe and not overproducing just yet.
Over in Hong Kong, dealers are playing it incredibly safe. They are holding way lower inventory and strictly buying only against confirmed orders. And when they do buy, the focus is highly specific. Round diamonds, 3 carats and larger, in top-tier D to F colors and IF to VVS2 clarities. We aren't just talking about jewelry purchases here. These stones are in high demand strictly for wealth preservation. The broader Chinese market, however, remains pretty quiet during the summer, with limited buying focused mostly on 1 to 2 carat rounds and ovals.
Finally, Section 4, by the numbers. Let's anchor all of this with the Rappaport Index data.
Okay, take a really close look at the monthly column on this table. This is where the story of August 2026 gets super interesting. You can clearly see this impressive recovery for the smaller stones. The half-carat category is up nearly 2%, 1.98% for the month, and the 0.30 carats are up 1.78%. Now, obviously, if you look at the far right column, the year-to-year data, those numbers are still stark. A 20% drop year-over-year for the half-carats shows just how deep that valley really was. But that monthly positive growth, that proves the momentum is finally shifting upwards and climbing out of that valley.
And this chart really brings it all home. Looking at the 3-month performance for the 1-carat index, you can literally trace the downward trend running totally out of gas. Look at the steep declines back in May and June on the left side. But as we transition into late July and early August on the right, the line just flattens out. It starts to zigzag horizontally. The 1-carat index has finally found its floor and stabilized, completely breaking that brutal 13-month streak we talked about at the very beginning of this explainer.
Which brings us to the ultimate takeaway from all this data. Think about it. We're seeing tight supplies, early holiday demand in the US, and a massive premium placed on exceptionally well-cut stones. But we also noted that 1-carat natural diamonds are starting to compete heavily with synthetics again because of these new, much lower baseline prices. So the crucial point we're all left to ponder is this. As these natural diamond prices become highly attractive to the everyday consumer again, is this recent price correction the exact catalyst natural diamonds needed to permanently reclaim their crown and win back market share from the synthetic market? It is a fascinating dynamic, and the upcoming holiday season data is going to be the ultimate test. Thank you so much for joining me for this explainer, and I can't wait to dive into the next data set with you soon.